Hello and welcome to FinextraTV. I'm Hannah Wallace and we're here at Sibos 2022 in Amsterdam. Joining me now in the studio is Kelly Mathieson from Digital Asset and Marjan Delatinne from SETL, and we're talking about regulated liability networks in relation to CBDCs. Ladies, thank you very much for joining us.
Thank you very much.
Thanks for having us.
Really good to have you on, and a fascinating topic at the heart
Indeed.
of a lot of discussions during Sibos. And I want to begin by you bringing us up to date and telling us why we're seeing this increased interest, especially amongst the financial institutions, and what's driving that trend. Let's start there.
I think we're at Sibos, so there tends to be a lot of conversation around the securities market. But the securities market is just one half of the story for transactions around the world. Having an ability to focus on digital currency and payment rails is really part of the overall industry dialogue. And I think what we're seeing is real practical discussions on how to get the environments prepared to handle digital currency. So say a focus on privacy and security, in much the same way if you and I were transacting in a euro right now, you should not know how I got that euro, and I should not onwardly know what you do with that euro. So privacy and security. I think there's a real focus on ensuring that there are elements of the two-tiered banking system. What we know as commercial banks and correspondent banks providing services should continue in digital form. And then opportunities for new features and functionality like programmability. We could talk a bit more about that. But it's a real practical level of dialogue around how to implement regulated liabilities and digital currencies in real world settings.
And Marjan, does that resonate with what you're seeing?
Precisely, and I think after a few years in the world of new technology, I think that there are still a lot of hype around all this conversation, and still many people are confused. I think what the questions or the way that Kelly is looking at it is the right way. From our perspective, we see the emergence of a token economy and different business model around that, right? And we see that the regulated market is not really equipped enough to tackle and connect with this new world. So I think CBDC is an important element because this is coming from the oversight, and it is in a sovereign representation of sovereign national currencies. And it will help the regulated sector to get closer, at least from technology perspective, and also understanding how they have to treat this new technology. So we see that in a very positive way, actually.
That's really interesting. Thanks for bringing us up to date there. And in parallel to the evaluation of CBDCs amongst the central banks, we're seeing the commercial banks as well as the payment providers suggesting a regulated liability network. So I'm interested to hear a bit more about that. And what's that resolving, do you think, the market?
Yeah, I mean, certainly it's one of the more exciting initiatives in the marketplace today. And I'm saying that not just simply because we have the pleasure of being involved in it. The way I think about it is, in time, there will be digital fiat currencies. There will be CBDC. But as you would expect with anything that's going to involve a central bank, there's going to be probably years of work to make sure that it's sound and secure for not only the government but the citizens, and that it is not only a part of liquidity but a part of monetary policy. Right? But on the path to getting to that point, there is some real work that can be done to be able to ensure that the digital payment rails are set up in a way that can support volume, scale, transaction that you would expect ultimately from these currencies. And I think what's been really brilliant about the approach for the regulated liability network is to say, okay, but we do have a structure in place, that two-tiered banking system that I was talking about, where commercial banks, correspondent banks, many of the attendees here, payment providers have the infrastructure in place to be able to support the obligation to give you currency on demand. Well, now we're talking about transforming those payment rails to be digital currency on demand. And as a body of work across different institutions, both within the banking systems and across the different entities, that is real work that is establishing scale, is establishing the ability to have interoperability between those platforms, right? Not one size is going to fit all, right? And to have some of those features and functionality, like the ability to program money for a specific purpose. All of this is really setting the core foundation, not just simply from a technology perspective, but from a ways of working, of a workflow perspective within banks, within payment providers and between them. And I think that that in and of itself is an enormous accomplishment. Certainly the work we're doing with SETL is really propelling that forward, but it is also setting the stage for CBDC.
Yeah, so tell me a bit more about the partnership then. Marjan, would you like to jump in there?
Well, of course, yeah. I mean, we are very lucky, and I think we see that in the regulated market there are lots of competition and cooperation, and we will see the same trend in the, I would say, the digital world. And we have been very, I would say, lucky to get in contact with our friends from Digital Assets in order to make sure that this is not, again, another new technology that it's in a few years' time everybody is forgetting it. The Regulated Liability Network is very interesting because we came across this white paper that it is the vision is coming from Tony McLaughlin
at Citi, right?
At Citi, exactly.
Yeah.
So, and he said this from my experience in the past. I really saw a real problem to solve, and this is going back to the big difference that it exists between the DLT and tokenized world and the world that we are today in a regulated market. So the big differentiator from our perspective is the fact that the value is on the network in the DLC. In any infrastructure, existing infrastructure, you don't have the value.
It still has all of the security or certainty around being regulated that you would expect. And I think that's the difference about what you're saying. It's a different way forward of balancing safety and security with innovation. Right?
Precisely,
Yeah.
And I think how we can transpose this model, that it is a very efficient model, even if it is not heavily used today and it is a bit on the crypto side, but how we can bring that into the regulated market. And I think this vision, the Regulated Liability Network, is a way for this segment to embrace the value whilst keeping all these requirements from the compliance, from the security, from scalability. So we build the very first prototype, and then we start another adventure with our friends in Digital Assets, because one thing that it is very important in this new world is the programmability. How you can create a programmable money. Now that the value could be on the chain as well.
Yeah.
So yeah, it's a very interesting paradigm.
Yeah, and it's a initiative that banks need to really think carefully about moving forward, isn't it? So I'm interested to hear then the impact this is having on cross-border payments as well. So
yeah, I think it's quite an insightful question, and it marries up to something that Marjan was saying in terms of networks. I think when you think about the traditional banking system, we are all, or if you're a bank, you're connected to the Federal Reserve or the central bank of your company. It's very much sort of a hub and spoke model, meaning we're connected directly to the central bank to handle an obligation or a liability on our behalf. And yes, we will work with other banks, but that's messaging. What we're talking about here, and Marjan used the word, is network. It's about creating more of an interconnected economic network, not only where we're adding new functionality in the form of being able to support digital currency, still providing the traditional type of banking services you or I would expect as citizens, but allowing for there to be a mutualization of workflow, the distributed ledger that Marjan is referring to, a mutualization of workflow, and the ability for an economic web to be created, an interconnected economic network. And that's different from a hub and spoke model. It's now sort of elevating it to a level of interoperability and exchange that we don't see in traditional paper-based currencies, and is really bringing the digital security world and the digital currency world together.
It's really interesting to get your outlook there. And Marjan, is there anything you'd like to add there?
No, I think it's precisely creating the value of the RLN, as we call it, sorry, the Regulated Liability Network, is solving for settlements. And precisely connecting at any end leg of any financial transaction is payments. You started from securities. And this tokenization is helping actually to connect the two legs. And this is obviously going to be a big shift.
Yeah. Watch this space, it's safe to
Absolutely.
say. Well, ladies, thank you so much. I'll leave it there, but thank you for sharing your insights. I'll let you get back to the event. But
thank you
it's been
so
a pleasure.
It was a pleasure. Thank you.